So thank you, Thomas, and good afternoon all, the last session of today. So I think we start off with a lighter session, first of all, and to talk about, I think, insurtech trends, particularly in Asia. And I think most of the audience in the room have heard of insurtech, and the terminology really started the best part of a decade ago. I think we're good this morning, 2010, was when it first started. But since then, with a good hindsight of 10 years in terms of seeing how they've operated, how they've thrived or failed. And I think with that experience in hindsight, maybe we can start to see if some of these insurtechs, are they really a disruptor, or are they an enabler, or are they actually a nobody? So my name's Lewis Lee. I've had the fortunate opportunity over my career to work with many startups, either as a collaborator, an investor, and also advising them on different solutions. My co-presenter Iris, she will introduce herself in a minute. She's actually a co-founder of one of the insurtechs in Hong Kong, a very successful one. Now, I usually like to start off with a bunch of logos and names because I think in the, the whole ecosystem on the insurance dollar, there are different categories of companies now playing globally. As I mentioned, insurtechs have been around for 10, 15 years, and in late 2020, early 2021, there's been a wave of IPO listings, particularly in the US, both in the New York Stock Exchange and the NASDAQ, some in Hong Kong as well. And some of the names you would have heard: Lemonade, Hippo, Root, on the GI space, and Clover Health on the health insurance space, and Oscar and that. There are up-and-coming ones that will be looking to list in the near term. They've gone through the Series B, C, and D rounds, and I think when the market sort of improves over the next 6 to 12 months, you'll see some more listings. But of course, the incumbents, insurers around the world, they're always looking to partner with, compete against, and/or purchase a stake of these insurtechs. But we should not also forget there are always non-insurance players out there. The tech companies, the Googles, the Apples, the Teslas of the world, where they have the customer base. They have the data, right? How do they play a part in this insurance ecosystem? Do they want to be insurers? I think the answer so far has been no. I don't think Tesla, yes, but apart from that, the others have not been as interested, despite their scale and size. But if we drill down a little bit in terms of the categories of insurtechs, what they actually do, and I broadly categorize them into four, right? One is what we call full stack insurer. They are risk carriers, that they're licensed, they're regulated, right? They underwrite the risk, they develop products, they pay claims, they distribute as well. A lot of them via digital channels, and that's they operate same as a normal insurer, but it's just that they are new and they do things a lot differently. If we go over to the right, there are a few agents, MGAs, that have emerged. That tends to be the easier route to a lot of these companies, where they focus on one or two products or risk areas, and they're trying to do that very well. Some of them, for example, they've done scooter insurance or food delivery focused insurance, because there seems to be a segment that's missing. But they don't need to have a license; they can just work and distribute that product with a licensed insurer. But if you expand that to a wider sort of intermediary, brokers and aggregators have also been around, and they've been quite helpful actually to consumers, because it gives them a broader comparison, but also an understanding of what products is about. But I think the fourth one is it's becoming very interesting, and I actually believe it's even more successful, are pure technology players that play in the insurance value chain, whether it's on the on the distribution side, on the underwriting side, on cloud solutions, core systems. I think those are the ones where it's really transforming the way both startups, but also traditional insurers, how they actually operate, from their from their own operations. So why do they exist? So why do insurtechs exist, and how do they actually generate value, right? So we can either say they enable innovation, or they disrupt innovation. I tend to think that most founders of Insurtechs, right, they start from a very, very simple purpose, and really is to find a pain point in the insurance ecosystem, and they're trying to make it better, right? Now, they will find probably the most painful sort of pain point that they can see, and with their ideas and with their solutions, trying to improve on that. Now, there's a number of words in that word cloud. You can see everything from embedded insurance to personalizations to APIs. Generative AI seems to be more popular now in the last, I think, probably 2-3 months since ChatGPT became viral. A lot of startups are now utilizing that technology to actually, touch on some of the pain points in the ecosystem. So we see a lot of that happening as well. But if I just focus on customer experience, that's something that I got to work on quite a bit over the past 18 months, and use some examples that I've seen. And these are all Insurtechs, mostly in Asia. Some also operate in Europe. If I look at the customer journey on insurance purchase, these companies have really transformed the way insurance are looked at, made aware of, and also engage with customers, day-to-day customers, and even the younger generation. So The Good Life, which is a remark company, it's actually a subsidiary of a global reinsurer, but they create engagement apps. Not only do they measure, obviously, your steps and your biological age, but they actually gamify the whole place, the whole app that allows you to get onto the app on a daily basis, and that's really a game changer in the industry, and they've partnered with a number of insurers in different parts of Asia. If we focus on the product space, 1 Degree, a fully licensed GI insurer in Hong Kong, they focus on products where, at the time, the market it did not have, like a digital pet insurance and digital asset insurance. So there was more of a product-first Insurtech, but improving on that customer experience and getting customers on board that journey, and they've been very successful. Staying in Hong Kong, YAS is an MGA based in Hong Kong also, and they look at the customer journey, along with how they purchase and how they actually, create that product. So I remember back in COVID where hiking seems to be a very popular activity in Hong Kong with a lot of hills, right? They actually created the whole GPS of different hikes around Hong Kong, and you literally will just press go as you start the hike to purchase that insurance policy for that hike, right? So they embedded that product into the activity. And lastly, Sunday, which is a Thailand Insurtech, they look at, I think, all those things together from a health perspective to help prevent diseases. But then once you have conditions, how you then actually improve from that. So I think there are a few examples around the region now. It's becoming more popular, and these names are now becoming more mature in the industry. However, I think with the explosion of the Insurtechs and also the financial markets being so volatile over the past few years, it's not all been roses. These are all the listed companies, Insurtechs, right? Mostly in the US, but some in Asia as well. The average stock price compared to when they were listed back probably 2020, 21, it's down on average 85%. Some are down 90 to 95%, the share price. There's a lot of reasons for that. Partly is that I think valuations were very high at that time. I think that was the peak of the market. That's one thing. I think the second thing is also, they haven't been able to make their offerings as efficient as they first thought, right? The technology cost is quite high. But also the marketing costs, the branding costs. All Insurtechs, they are new brands, they're new names, right? And it's actually not a cheap thing to actually build up your brand to create that customer trust. So I think the combined ratios is into the sort of 140s, 150s, and that's not a long-term sustainable gig if you can't get that down to a profitable level. I think the markets are quite good at picking out these issues. But what does this all mean if the Insurtechs are not performing as well, right? I think the model is now moving towards collaborating a lot more with the incumbents, right? A lot of existing insurers that's been around 100 years or more, right? They have their own legacy problems from technologies, from organization legacies. They actually, all the insurers that I actually talk to, they actually look for the insurtechs on how they do things differently. They know that they're not going to be a threat in terms of the market share or the volumes, but they see how they do things from an agile way, from a technology kind of way, right? So flexibility, agility, tech-enabled solutions and all that. That's something that what we're seeing more and more, and that's why a number of the insurers have their own internal corporate VC funds that looks to purchase into these. And just some examples of that. In Hong Kong's Sun Life, 150-year-old company, Canadian company, but 150 years in Hong Kong. They literally invested in the first startup company in Hong Kong called Bowtie, right, and just left them to do their own thing, and it's now become the #1 digital life insurer based in Hong Kong. Singapore, national company NTUC Income, create their own sub-brand called NTUC Income to have daily interactions, right? IAG in Australia has Roland, which is a younger generation motor insurance. And lastly, Tokyo Marine, a 150-year-old company from Japan, just launched a digital insurer just to focus on auto insurance, motor insurance. So we are seeing more and more of these sort of central oil insurance companies, rebranding themselves with technology and learning from the insurtechs. And I actually think that that's going to be the trend, for years to come. I think with that, let me pass over to Iris. I think she's got even a more interesting story to say, given that she actually co-founded and actually runs her own insurtech company. So I'll pass it to Iris. Thank you.
Thank you. Thank you, Louis, for giving us the glamorous side of insurtechs. Now it's my turn to tell you the real stories. Well, 7 years ago, I made a decision to quit my well-paid corporate actuary job to start this insurtech company. Many people thought I was crazy. At that time, fintech was a buzzword, but insurtech was less well known, and being a co-founder of an insurtech as an actuary was unheard of. Well, little did I know that it would be so challenging to make the digital transformation in the insurance industry, especially compared to other financial industries like banking and investment. So today I'll be focusing on the challenges faced in the Hong Kong market where my business operates, but I think the issues are similar in other parts of Asia and around the world. So one of the biggest challenges faced by insurtechs is the domination of major insurers. In Hong Kong, the life and health insurance sectors are dominated by big players, with the top 10 insurers accounting for over 85% of the market in terms of in-force premiums. And these large insurers have their own tied agency sales forces and exclusive bancassurance partnerships, which helps them dominate the distribution channels. And to make matters worse, they're often anti-competitive and not willing to share information and data. Everything is non-transparent, and there's no market standard, making it very tough for consumers to understand and compare the products before they make the purchasing decisions. Then another challenge for insurtechs is that they simply can't do it alone. Sure, we've seen some impressive stuff in Louis's slides earlier, but the truth is the size and the influence of insurtechs is still relatively small. In Asia, the traditional offline face-to-face channels still dominate the market, with the sales still dominated by tied agents, brokers, and banks. In Hong Kong, we have seen recently some new digital-only insurers and some traditional insurers, like Louis explained before, starting their own digital channels. But the total digital sales is still only about 5% of the market. And often, the innovative solutions are single-focused, so no one insurer or one insurtech can provide the best solutions for everyone. Some insurers might focus on serving the distribution, which is where the money is, but others might be working as part of single insurers. So what we are lacking is a connector that enables different solutions to benefit all stakeholders in the market. So that is why, despite all the hype about insurtech disruptions, the problems with insurance still remain today. Our customers can't understand the products. so they can't get the right protection. And on the other hand, our advisors are driven by commissions and struggle to get the trust from their customers. We constantly hear complaints from policyholders across the industry on accessibility and claims. And this is often when they most urgently need the coverage and payout. So ultimately, the insurance companies are the ones who are getting their margins squeezed due to the high cost of doing business. And as an actuary, that just didn't feel right to me. Why can't we just use all the data out there to make insurance more accessible and transparent? And that is why and how I started 10Life. So we started collecting product data from various insurance companies' distribution channels. They're often in paper forms with pages and pages of contracts. Our team of actuaries and insurance experts then broke down each product's benefits, features, and terms, and stress test them against each performance criteria and market benchmark. And we assign different scores. For each type of insurance, we assign a 5-star rating to the top performing products. Transparency is vital for everyone. So for each product, we published both the summary and detailed performance data, along with our rating methodologies. And this enables the public, to compare products side by side and make informed decisions. And because the 10Life platform is free and open to all, it's attracted many users over the years and also gained a lot of interest from insurance providers and advisors. Just now, Louis took us through the different types and categories of insurtechs. And it's interesting to see how each one provides a solution to one stakeholder, usually either the policyholder or the insurer. At the same time, they capture data mainly from their policyholders and selected insurers in case of some brokers and tech solution providers. Now, when people ask which category 10Life belongs to, it's always hard to answer because we're a bit of everything except not being an insurer. What we do is connect policyholders with advisors and insurers, and because we compare products from all insurers in the market, regardless of whether we partner with them or not, we're able to capture all data from all stakeholders in the market. So over the last few years, we've captured more than 1 billion insurance data points from these stakeholders, including our 3.4 million annual users who come to our platform for insurance education and comparison. We collect data from the 50,000 insurance advisors who use our services to interact with their clients and potential clients. And with over 50 insurer partners who use our platform to market their products and services to their customers, we also work together to come up with better products and services for the policyholders. We also work closely with the media as they trust us as an independent source of unbiased information about insurance. At the same time, we work with regulators and government agencies to improve the protection for the overall market. So let me show you some examples of how the continuous iterations of data points are helping us to continue growing the company and the industry. So from the policyholders and advisors, we gather customer behavior and preferences on products and services, which can help create more personalized product recommendations. And from the insurers, we collect data and products information, as well as claim payouts. From service providers such as clinics and hospitals, we gather information about medical bills and customer statistics. So this can all help create better products and services. I think the advancement of data science and artificial intelligence can definitely help us accelerate this growth and bring more innovative solutions for our stakeholders, be it the insurers, the advisors, and most importantly for us, the policyholders. So our ultimate goal is to bring back fair insurance to the whole ecosystem so that people can get the right protection through fair products, fair claims, and fair sales. So the journey has been exciting, yet challenging. If you were to ask me today if I would still make the same decision to start 10 Life 7 years ago, I'm not sure. But I know I'm not alone. In recent years, we've seen many actuaries around the world taking the path into insurtech startups. So here are some examples of actuaries who have founded insurtech companies in recent years across diverse regions and sectors. Some of you might know, and some are, I think, in this conference as well. So I think with these examples, we can show that actuaries can do it. Okay, now I know it's the Q&A session, so let me steal the Q&A by inviting Louis to start my last slide, which is one of the Q&As.
Okay, so
Okay, the question is.
Do you have questions in the room first?
Yes.
Yes, please.
I can start with my
Could
first
you go
question about.
to a mic in order that people, there is a mic coming to you, because we have people who are looking at us online.
Yeah. Can I start my first question?
Okay.
No, I mean, I'm sorry. This question. About
you have a question.
Whether actuary has an insurtech advantage, whether there's an actuary advantage in insurtech. I'll start with the negatives, because as actuaries, we're often seen as risk-averse, arrogant, and introverted. Any one of those actuaries here in the room? I can admit I'm one. But I think we can also turn these negatives into positives. So we might be risk-averse, but we know how to make calculated risk. And balancing growth and profit, managing assets and liabilities, which is crucial for a startup to survive. We might be arrogant, but we're constantly learning and applying the control cycle to improve our processes and learning from our mistakes. We might be introverted, but we understand the importance of teamwork and networking. And I think actuaries also have the rare domain knowledge of both insurance and data science. And most importantly, I think our DNA in governance and fairness is our biggest advantage. And in today's speed of growth and technology, we need the human compassion side to balance and fairness in the industry. That's what I have, so we're happy to take questions.
Okay. Okay, thank you. Please.
Yep. So with your insurtechs, they're very, very short-lived. I mean, they're very young companies. So in insurance, how do you make your customers feel comfortable that you're actually going to be around to pay their claims, especially since there's been a lot of companies go bust lately in the high-tech arena? Okay.
My particular 10 Life is not an insurer, but we work with insurance companies, whether they're startup, like virtual insurers or established incumbents. So when we evaluate the products, we don't look at how necessarily how young they are. It's up to the customers to judge. But we do look at the products on a side-by-side basis.
It's more insurtech in general, though.
Okay. Maybe
how do you overcome the reluctance of people? Because you're going up against companies that have been around 100 years or so. It's probably common for all new insurance companies, but high-tech does have a name lately of a lot of companies, well, not only going bust, but being fraudulent.
So perhaps we can add to the question. So do you mean that you could advise a product for a company that will go for failure in the next year?
Right. Perhaps. I think a lot of DNOs. Let me answer that question. So I think there's a few ways to answer this question. I think first and foremost, it comes down to the line of business, right? Obviously, life insurance will be much longer term and more susceptible to that potential risk uncertainty, right? GI and particularly health insurance as well, it's going to be a lot short tail, right? So that's why we see a lot more insurtechs in the full stack space around the short tail and GI. I think that's the first thing. The second thing is that I think the regulators have make sure when they issue out licenses, a lot more scrutiny in terms of who are the investors, how solvent they are, and also what happens, when their solvency goes below a certain level, the target capital levels, things like that, right? Contingent capital in play, reinsurance must be in place for certain type of risk, right? So there's a lot of behind-the-scenes regulations which, you can't see from a customer point of view, but I think the regulators, before they issue the license, ensures that they have that, right? In some markets, a condition of issuing a startup insurer license, you must have one of the shareholders being an incumbent insurer, right? So it's almost like a backstop to that, right? So we see that as well. So different countries will have different ways of trying to do that, right? But ultimately, it comes down to that insurer, creating that brand awareness, but also that certainty, right, to the customers, and that comes down to both the marketing strategy and how they are able to work with, the distribution on that.
So the second question, please.
Bill Constantines. How have the big incumbents reacted to your entry, and have they noticed yet?
Okay, we call the big entrants, the big companies, frenemies. Because I think when we started, we were a threat to them because we're disrupting the traditional, well-established distribution channel. But then when we started helping the smaller insurers to market their products, to rate their products based on the product coverage rather than how big the sales forces are, the bigger companies started noticing the advantage of us helping us reach their customers as well, especially during COVID when everyone's not out there selling, being sold products face-to-face. They actually recognize our power of to help them market their products. So they started coming to us for partnerships as well.
So have they started? Has it led to a standardization of product in the industry or not?
Yes and no. There are. We're happy to see that some of the bad terms have been improved. Some prices have come down, but still, a lot of big players are still happy to have maybe a non-competitive product, but they still have a big sales force to help them sell those products.
Okay, so there's a question online about, so 2 questions now. First one, do you see a role for reinsurer in the Insurtech ecosystem beyond simple reinsurance capacity providers? And the second question is more about money. How do you meet your overheads in your company? Where you get the money?
Maybe I'll answer that question.
The first one for reinsurers, for you.
Okay, yeah, so I used to work for a reinsurer. So it's a few ways, right? Firstly is from a risk carry perspective. A lot of the insurtechs are purely focused on distribution, so MGAs and brokers, right? So they will underwrite the risk with a pen, but with risk appetite given by the reinsurers up to a certain capacity, of course, right? So reinsurer is very important to play that role to carry that risk, right? Literally offering the policy issuance. So I think that's one way. The other way is reinsurers that do have their, investment arm. They do invest in these companies and utilize the technology to help their own reinsurance solution. So there are typically those 2 ways where reinsurers get involved, yeah.
Okay. Revenue model is always important. Right now, about 80% of our revenue is coming from the insurance companies who are partnering with us, either to help them market the products, we license their ratings. They can use to communicate to their customers based on a third-party basis how well performed their products are. But at the same time, we're also growing our brokerage channel because in Hong Kong, to operate a comparison website, we have a broker license, and people have started to come to us to buy directly. So that's where the main growth path would be.
So there's another question, please.
Yes. Hi, great. Thank you very much. Jathan Sadowski from Monash University. I was just really curious, you said you had collected 1 million data points, and I was curious if you were sharing or selling that data or the analysis from that data with other industries to help improve products or market analysis or anything along those lines.
Yes, we are working with insurance companies to come up with better products and services based on those data, not necessarily selling directly to them, but using the data with together with their data to come up with, say, better products and better maybe claim system. Yeah.
Clearly, when it's free, you are the product. Okay, there is a. Perhaps we will take the last two questions, and we will go to the next
I've got a question.
presentation. Oh, free.
Yeah, so I appreciate the presentation, Jason from Zero Partners. So I think, Lewis, you mentioned that a lot of insurtech startups focus kind of on pain points. And Lewis and Iris, I think you touched on the actuarial kind of advantage in insurtech. I guess, but a lot of actuaries, from what I can see, they're kind of more in the back end of companies that might not necessarily see kind of the distribution side or kind of the product side. So I'm kind of keen to understand any tips you might have in relation to how can kind of actuaries become more exposed to kind of these pain points.
Okay, let me take a first cut and then Iris can. So I think that's a very good point. I would say, first and foremost, I think actuaries have a great sort of skill set to understand the end-to-end, right? Even though you might work in a certain department or certain team, right? But I think the knack of trying to learn something deeply, I think that's quite important. And I think there's actually no real tips, but just try to actually rotate and actually, work in different departments, different teams, just to see more things, because I think actuaries can actually play in most roles within an insurance company. Yeah.
Yeah, to add to that, even though you're not working directly with the products, I'll encourage you to actually go and actually study the products yourself and make a judgment on whether you would buy that product yourself. If you or your family won't even think about purchasing the product, maybe there's something wrong in the first place.